Markets surge on a glimmer of hope. Is Trump's shift in China trade talk the game changer we've been waiting for? Hey there, fellow market watchers. Imagine the relief washing over investors as trade tensions between the US and China finally show signs of cooling down. It's a tense world out there in global economics, and today, October 12, 2025, at 10:38 p.m. UTC, with an update rolling in on October 13, 2025, at 12:57 a.m. UTC, US equity index futures are climbing and oil prices are bouncing back, all because President Donald Trump hinted at openness to striking a deal with China. This comes after markets were shaken by a sudden flare-up in trade disputes, leaving everyone wondering if we're on the brink of another full-blown trade war. But here's where it gets controversial. Could this be just diplomatic posturing? Or is it a genuine pivot that might reshape global trade? Let's unpack this market wrap and see what the numbers say. To give you a quick refresher, for those just dipping into the world of investing, equity index futures are like bets on how major stock market indexes will perform in the future. The S&P 500, for instance, tracks the performance of 500 large companies listed on stock exchanges in the United States, serving as a barometer for the overall health of the American economy. On this day, contracts for the S&P 500 and the Nasdaq 100 indexes, another key index focused on tech-heavy stocks, shot up by more than 1%. What sparked this optimism? The Trump administration dialed back its aggressive language, following the president's earlier threats of imposing a whopping 100% tariffs on Chinese goods in retaliation to Beijing's export restrictions. It's like a high-stakes standoff, where one side finally lowers the volume, giving traders a sigh of relief. And this is the part most people miss in the headlines. These moves aren't isolated. Treasury futures, which are contracts based on US government debt and often indicate expectations for interest rates, dipped, while oil prices rose by more than 1%. Oil, as you might know, is a global commodity that swings wildly with geopolitical events. Think of it as the lifeblood of industries from transportation to manufacturing. Meanwhile, cryptocurrencies, those digital assets like Bitcoin that have been riding a roller coaster lately, steadied themselves after a brutal sell-off the previous day. Silver, the precious metal known for its industrial uses in electronics and jewelry, even flirted with a record high amid a historic short squeeze in London, a phenomenon where traders who bet against the price are forced to buy back in, driving prices up, and the lingering effects of those trade tensions. Oh, and gold? It hit a new peak, underscoring how investors flock to safe haven assets when uncertainty looms. Now, let's pause and reflect on the bigger picture. Trade wars between superpowers like the US and China can ripple through economies worldwide, affecting everything from consumer prices to job markets. For beginners, picture it like this. When countries slap tariffs on each other's goods, it raises costs for businesses and consumers alike, potentially slowing economic growth. Trump's bold tariff threats were a stark escalation, as detailed in reports from Bloomberg. But his recent openness to dialogue offers a potential de-escalation. Yet, here's a controversial angle to ponder. Is this administration's approach, swinging from hardline threats to conciliatory signals, effective diplomacy, or just a tactic to pressure China into concessions? Some argue it builds leverage, while others worry it creates unnecessary volatility that hurts everyday investors. What do you think? Does Trump's shift signal real progress, or is it just setting the stage for more drama? Share your thoughts in the comments below. Do you agree this could be a turning point, or disagree that it's enough to stabilize markets? I'd love to hear your take and debate this further. After all, market trends like these shape our financial futures.